Okay, good morning, everyone. Let's get right into the stock market technical analysis. Going to go through what I'm seeing in the charts today. Drop me a thumbs up as we get going. Okay, I'm going to keep this video relatively brief because we just did a big long live session on Saturdays. So if you guys are interested in attending the live sessions where I basically analyze I analyze my subscribers' stock picks, then those go off on Saturday around 9:30 a.m. Pacific time. Okay, triple Qs. We'll start off with the tech sector. We gapped down today. So obviously, looking at the daily chart here, we're clearly getting rejected off of that 200-day simple moving average, which was right there. That one day we popped above it back in March. And we have, really seen nothing but selling ever since. So I think it's a pretty clear sign that held as major resistance. That was a key level to short at right there, and so far more downside. Today we gapped down. Looking at the hourly chart, we have a potential downtrend line. Well, we've got a downtrend line I've kind of marked out here on the hourly. It's something like right about there. So we might we might see a little bounce today and bounce up and maybe close the gap, or bounce up and hit this trend line right up in here. That would probably be the extent to which I would think the bounce would run to, but that's maybe what I'm expecting. But that's only on the short term. On the daily, looking for more downside, all right? So I think we're heading down. Really the main level for me would be the lows that we just reached before this bear market rally, right there at about 318.75. I'll just call it 318 flat. Right in there, that's going to be a battleground. And if you take that level out, we break that level, then it's pretty clear that we're going to head straight down to that 300 target and possibly a lot lower. Okay, so we got a ways to go to get there, but we're heading straight down. So I do expect that we actually head there relatively quickly. The SPY gapping down today, clearly just gapping below the 200 days. So again, those 3 days that we tested last week, the 200 and closing below the 200 means that I was looking for more downside, and sure enough, we got a gap down and we're just selling down. So I think that the rally that we recently saw is over, and we should be heading a lot lower here in the near future. Again, we've got the near-term lows in the SPY. Really is about here, I would say. But just benefit of the doubt, you could say it's about 411. Maybe I'll move that up slightly. We take that out, we should head much lower, all right? And again, SPY, I'm looking for, right now in the short term, we've got some support right down here at about 400-ish. A little bit of support. There's a minor gap that we haven't filled from way back in April of 2021, so that might be the near-term target. But again, we got to take out the lows. We got to see the Qs take out the lows. Small caps. Okay, on the small caps, they're actually holding up relatively well compared to the Qs. The tech sector is selling off, and the small caps are really hanging in there, probably due to the fact that the small caps does have some banks in there. So XLF, we'll look at that here. There's a key level that needs to break, likely for the small caps to continue to sell off. But, still down today. So I'm expecting more downside, although in the short term we could see maybe a minor rally today. But any kind of rally that we get today is should be short-lived, and we should continue lower over the next days to weeks, I expect. Now, small caps, we got to take this level out right here. 188, we'll call it. All right, we had two reactions where we held. So if we back down there, I do think it'll break, but maybe we'll tag it. They'll probably bounce it, at least the initial tag of it, and then it'll probably come back down and break. Okay, but you do need to take that level out. And if we do that, then very, very high likelihood we're heading down to the next level of support, which is about 173.30 all the way down to about 170. All right, that's a zone of support. Okay, the FANG stocks are taking it on the chin today. So Amazon, clearly just more selling. And again, I'm looking for, Amazon, this is kind of messy here, but Amazon, we're basically looking for this level right here is the next level of kind of major support, about 2040. All right, good support there. So that's where Amazon looks like it's heading. Google below the 200-day, just selling down, pretty impulsively. So more downside there in Google. I don't see support on Google until we get down to about, there's probably a reaction somewhere right in here. That's likely. And that's about the 2,131 down to about 2,030. Little zone of support, but good support just slightly below that, all right? And that would be big bull market support right there coming off the 2015 time frame. Okay, so you can see tags of support there. That's the zone that I think we're heading down to in Google. Not much in Facebook, but Microsoft below the 200, gapping down pretty impulsively. You can see Microsoft has almost given up the entire rally. This is the bear market rally in Microsoft, and it's already just about given it all up, and with big gaps along the way. So it's trapping all the bull money, all the buy the dippers that were buying the dip on the way up. They're starting to get trapped into their losses with these gap downs. So looking for lower prices in Microsoft. And Apple's the one holdout that is still above the 200-day moving average. So again, near-term target would be the 200. You'll need to see the 200 get taken out. And then there's also there's some support. It's actually pretty good support right here on this trend line. All right, so we need to see that get taken out as well. So good zone of support in Apple down in this area. And we need to break that in order for the market to make its next leg lower. I don't expect that the market, we're going to hit our targets that we've been pointing out in the indices unless Apple takes out this zone of support. So gold, more sideways action today. We basically hit this kind of short-term resistance area of 1961, but basically just more sideways action. And again, we're in between support and resistance. Support down here at about 1834, big resistance up at the all-time high is about 2075 or right in there. And we're just in the middle. One thing I'm kind of hesitant on is the miners. So GDX, a couple things I want to point out. On the daily chart here, you'll see we've got negative divergence that has been building now for a little bit. So there's your negative divergence. See how the momentum is dropping off, and yet the miners continue to kind of pop up and make these little highs, divergent highs right here. And we had another one today. So I don't know. I think the miners could pull back, and we don't have a sell signal yet. And there is a clear uptrend right here on this trend line on the daily chart for GDX, but we do have some divergence. So if we get a breakdown of this trend line right here, then that might mean the miners are going to actually come down for kind of a back test, probably of the 200-day moving average, and right in anywhere from basically the 200, which is about $33, down to $31.50. That's a buy zone for me. I'll be buying the miners down there if it wants to pull back down there. So a couple things that I'm seeing, just want to point it out in case we do get that breakdown. There is potentially a decent amount of downside from where we're at now down to there. It's about a 15% or 16% just to the 200-day. So we could see that, and I just want to point out, doesn't mean we're going to. We don't have a sell signal, but we do have divergence on the PPO and the RSI, negative divergence. So that's telling us there's a high likelihood that we will get a breakdown. And here's the financials, XLF. I'll kind of clean this up a little bit, but the key level that I'm really watching is 37. 37 in the XLF. You can see we just recently hit it here. We hit it back here in January. Hit it again in December. It's been a key level of a key reaction level. So I need to see that break, a big breakdown of the 37 would be the next sell signal in the financials, and the small cap should roll over if that happens as well. So keep an eye on that 37 area. Okay, a couple individual trade ideas. UPS. This is playing out exactly like I expected. So on the daily chart, we've got some. Well, let me go back to the daily. Right there was your former level of support, 193.20, and you can see we basically hit it as support here. We hit it again, and then recently we got a sell signal right here to sell UPS. We broke that level, and today we rallied up into it, and it held as resistance. So that was basically another objective area to short with a rally into that resistance. I'll show you here on the hourly chart. There it is. We gapped down opening and then rallied right into resistance, and then a clear rejection. So that's resistance right up there, 193.30, and we should head lower over the near term. And the bond market, here's TLT. This is your long, 20 plus year treasury bond. This just continues to drop and sell off pretty impulsively. So we're seeing interest rates rising very rapidly. Likely something's going to break. So maybe a brief rally today in the markets, and then I think there's likely going to be a pretty swift move to the downside here in the near future as the rates put pressure on tech and the whole market in general. So that could be what's going to show up. Even gold might sell off. Maybe that's what we're seeing in the miners there for a brief kind of liquidity event where we get a swift move down. And the bonds should rally at that point because likely you're going to see the institutions move out of the equities and move into bonds for a rally or a safety play, something like that. So, but again, bonds, TLT selling down. We're seeing the, let's look at the TNX. The 10-year interest rate is up at 2.8, 2.79 and a half. Pretty swift move in interest rates over a pretty short period of time, and that's usually not good for the bond market. Now, looking at the weekly, though, I do want to point this out. So this is going all the way back to 1986, and this is basically your interest rates. And you can see we've been in this downward price channel here, and as we're rallying, we're coming up to the top of this channel, up, which is about 3.2%. So we should see some sort of a reaction, at least on the initial tag, a pullback in rates or something. So whether that's a drop in the market and a rally in bonds, that might be how that plays out. But I am looking for interest rate yields to probably start to top out here relatively soon. And then there should be a bid in bonds, which I think is telling me that the market's about to have a pretty substantial leg down. Okay, I don't have too much else. So guys, drop me a thumbs up on your way out. Check out my stock market technical analysis course, link in the description below. It's about 4 to 5 hours of video trainings going across all the concepts that I teach in my, really with my strategy. So check that out, link in the description, and I'll catch you guys on the next one. Bye.